This is Teddy from thefinancialbulls.com with your bi-weekly market recap and some setups for the next 2 weeks. So just going to just a nice chart of the S&P. Obviously, we're at all-time highs right now. We're flirting with this on the SPYs, the 208 area, and we're not breaking through this level very nicely. We're just kind of flirting the past 4 days with this level. If you go to the 1 month chart, as you can see on the SPYs, I'm going to go to the SPX actually, the real. Oh, okay, so it's kind of different on the SPX actually. I don't know what's happening, why the SPYs are just hanging in that area. But yeah, we've broken above actually the 2080 area, and we're 10 points higher. We're higher this morning. I'm making this video at 9:55 on Monday morning. We're up 3 points. So I feel like as long as we hold this 2080 area, then we'll be safe. And as you can see here, every time we've broken to new highs here, we've had a substantial run up. After we broke 2016, we ran from 2016 all the way to 2080. And after we broke this level, 1988, I mean, it wasn't as much of a convincing rally, but we still kind of rallied. But this is my kind of cause for concern right here, is as you can see, the past year, higher highs, higher lows, this is textbook uptrend. I mean, this was a vicious rally right here that probably wiped out the careers of everyone who was short. No, not really, but it was pretty intense. And as you can see, we just have these big run-ups. We have consolidations. We either have well, this one actually didn't really fit the pattern. But as you can see, we have I'm just seeing that we have these big run-ups, consolidation, pullback, run-ups, consolidation, pullback. Right here, run up, consolidation, pullback, and we only had run consolidation that really did not lead to a pullback. Here, run up, consolidation, pullback, run up, consolidation, pullback. That just seems like that's just the behavior of the entire market. So right now, all we know is that we're in the run-up phase. The consolidation hasn't really started. So if I'm looking for a long trade, I'd still say hey, go for it. It's completely safe. We just broke out. We're above the 10 and then 21 period moving averages, which I like to use to gauge short-term market direction and momentum. So why not? Maybe you could just go for it. Or if you want to be really risky and you're not in the mood to trade right now, you can wait for this pullback that we had all these other times, and you could be a buyer. Because as you can see, the last video was around here, and I was saying just kind of be careful with your longs, and that proved to be correct. I mean, we just went up a little bit more and then pulled back pretty sharply, but we've rebounded ever since then. I mean, hey guys, as long as the Fed is doing their easy money policies and has low interest rates, I see no reason why the market can't keep going higher. Could be due for a nice correction, but who knows when the correction is going to come. Nobody knows when it's going to come, and anyone who tells you they know is lying to you. All we know is that short-term market direction's up. We know the patterns from previous market action, so stick with your longs, and the market looks pretty healthy here. So to go for some plays that we had, we have from 2 weeks ago, or from 4 weeks actually. I didn't do a video last week. I couldn't do it because of schoolwork. We had CUDA. So CUDA actually didn't really work out. We had this bull flag here setting up above the 10 period moving average, and I was thinking above this level we would buy, and that would have actually been a losing trade because I probably would have gotten stopped out here. And I know it's rallied since, but if we play the initial flag, the consolidation, it would have stopped us out. Some plays did work. FedEx, that worked. So you can see we saw this bull flag right here, and then it ran up, held the 10 period moving average from 173 all to 183. So that would have been a nice play if you played some options on that. Another play that worked out, VAC. We saw the flag here, but holding above the 10, and it trended nicely from 72 all the way to $76 a share. EROS, what did that do? It was alright. It broke above this flag, not convincingly. I probably would have got out here just because the move was so weak. RHI, this one failed. You can see this consolidation right here, and then just did nothing, and now it's rallied back. But actually right now it's forming a nice flag, so if you want to get involved here, and as you can see on the hourly chart, bottom support of the flag around 58.45, so this would actually be a very nice place to get long. some short plays that I highlighted in the previous video that actually most of the short plays worked out really, really well. I'm kind of kicking myself. I wish I had money on them. But AAOI, that was a beauty. As you can see, we saw this bear flag forming right here, hit the 10-period moving average, and just got hammered from $13 all the way to a low of $9.54 in a matter of a week. Just intense selling pressure, and that's just a textbook bear flag. And then another one that worked out really well, this was kind of related to the oil play, but right here, this bear flag formed, and this was perfect, and it got crushed from $19.72, from $20 from the top of the flag, where we saw it, all the way to $15. So 25% in what? Mostly 3 days of trading. That was very nice, and that just shows the power of chart patterns, along with short-term momentum with collapsing oil, because everyone knows that's happening. STKL, that also was a nice bear flag. Took a little more patience to trade this one, but it broke below after a nice selling pressure, consolidated, and then trended downward all the way to $10.60. So now for some plays that I am looking at. From the long side, this isn't really a flag or consolidation momentum play, but it's CYOU. And this stock recently broke above this $25 level on really high volume, and it pulled back, and that retest is where I put it on my radar, and it's bounced a little bit since, up $1.50 or so. But I mean, it stands down 0.5% this morning, but I still think it could go. I mean, this high breakout volume, pulled back, and I don't see why it can't go higher. EIGI, probably a nice little bull flag right here. As you can see, just holding in between these two trend lines, a break above 1910, I'd say, or a pullback to 1851. I would be long. I'd most likely get it on a pullback to 1851. RKT, this stock also nice consolidation pattern, just hanging up here on 52-week highs. I think 52-week highs. Yeah, 52-week highs. And this looks like a nice play from the long side. BRC. Ooh, so this stock's breaking out actually. So broke above this 2670 level, pulled back, and now it's kind of holding on this flag. And as you can see here on the hourly, it's actually breaking out. So this would be a nice place to get long if you didn't get long right here on the retest of 2674. Now for some plays from the short side. Not many plays from the short side. We have SJT. I was looking at that. Yeah, so this stock, it's gotten hammered since early November, and San Juan Basin, and now it's forming this nice bearish flag. So I'd actually short on a pop back to 1450, and then put your stop right above it, like 1460. So it's a really high risk reward. You're risking what, 10 cents to make possibly, at worst, right? At minimum, $1. So I'd take that trade any day. EGY, thinking of that. EGY, this I have short, no bearish flag or anything, but as you can see, just selling into the rally. I mean, the stock's been pummeled with decline of oil. And right here, I find this thing, I watch T3 Live a lot, which is a trading service, and they have YouTube videos, they have a daily recap and things like that. And one of the strategies is a red dog reversal, and that's pretty much where a stock has a big run up in price, and then the stock goes above the previous day's highs but closes below it, and that's what we had with this day right here. That was your reversal, where it went above the previous day's high at 508, but this closed sharply below, and it's running into resistance to the 21 period moving average, and it's technically overbought. I mean, it's had a big run up from $4 to $5.20. So I think this would be a nice place to sell a rally with a stop above the 21 or above this previous day's high at 523. Another one, MFRM. The stock's acting nicely, just a nice bearish flag, bearish ascending channel. As you can see here on the hourly, it's just trading between these two parallel lines. So a short back up at $60, or it's heading back down now, so you'd probably have to short at 58. And that is about it. So there's your market recap. Just go back to a chart of the SPX. There's your market recap. So if you have longs, congratulations. Keep the longs on until we start to get into this choppy price action trading that we were in before. And yeah, that's about it. So thanks for watching and happy trading.